Hello, this is Right Side Trader. Today is May 29th, 2025, and this is my weekly trade review. This is not a trade recommendation. This is my SPX 0-day option, $10 wide, 0.2 delta trade that I wasn't able to place again this week. I'm doing this here on Thursday because Friday I will not be in front of the computer. I will not just will not be in front of the computer, and I will not be in front of the computer come next week either. I'm gonna try to get my market review out tomorrow. I'll see if I get to it or not. I may not get to it. I might be able to get to it Saturday. Or I might end up just doing a 2-week market review come next Friday. That's what I might end up doing. But all this is no trade recommendation because we all know trading is risky. You can lose money at trading. So please check with your financial advisor. Please check with your significant other and make sure trading is something that is suitable for you. What I'm going to do today is I'm going to go over some of the lessons learned because all week, again, this week, I wasn't able to place that SPX trade, that 0-day option, $10 wide, 0.2 delta trade. But what I'll do some lessons learned, right quick, and just make this quick and short. And we'll take a quick look at the chart. Let's take a quick look at the chart first. I always like looking at the chart. And all the day is Thursday. We had a crazy pop from the NVIDIA earnings and all. NVIDIA earnings. Should I say NVIDIA earnings? It's a money making, but enough of that. We had a nice pop in the market and all from NVIDIA, and also again trying to again, when you got events like that happening, you need to decide: are you going to actually are you willing to place that trade or not place that trade? It may or may not work out. Again, like when we get these, I'm looking at these gaps in the market right now. And that's one of the things based on your trading, savvy that you have, and based on that's why again I say practice these trades and all, so you get to see how the market works, and that's why I like doing it a year, so I can go through all 4 earnings seasons just to see how things work. Again, nothing is going to be the same, but when you start getting gaps like this in the market, this is a little gap like this in the market, and a gap back over here like this in the market. This is why I will not, put this thing on at the end of the day and try to trade it on the next day just to get away from a day trade. That's where it gets to. If you want to do this trade every day, you need to have at least $25,000 in an account, and I would say at least $30,000 in an account. And then even with $30,000 in an account, I wouldn't trade no more than 5 contracts. That's just me, and that's my little plan that I'm looking at doing, and I'll scale up from there. And I know that's a long ways from what you've been seeing, but I need to trade it to see, okay, what's possible. Then I'll actually trade what's realistic for me and what I know I can actually manage, and what I can manage mentally and handle mentally, and build my way up from there. So that's pretty much that. Let's go ahead and some of these lessons learned, and I'll just go ahead and wrap this on up. And I think I created a little side presentation. Boom. Lessons learned. Max loss. Number 1, you don't want to take max loss on this trade. Do whatever's possible based on your risk tolerance. Close this trade as early as possible, and all. Don't look to hold this trade all day long. My close time is 11 a.m. Eastern time. My entry time is 9:30. I know that's what's best for me. I know there's been studies out there showing that 10 o'clock, maybe 10:30 might be a better time. And I can see that's if you weren't looking for the market to settle out, and then you're still looking for that data decay. But around that time, the market also starts trending, if you've been watching this thing. And if it's going to trend around those times, it's going to pick a direction. It's going to pick the direction if it wants to go up, or if it wants to go down, or if it's going to be going sideways all day in a tight range. So 9:30 is the best time for me to go ahead and enter this trade based on my little information that I've gathered over the last 4.5 months, and I'm okay with that. Exiting this trade, the minimum that I want to take on it is like 20 cents. 20 cents to cover commissions, and I make a dime or so. I make some money. So I'm okay with that. The maximum loss that I want to take on this trade, if I'm exiting it, is $1 over my break even, and that can be crazy, based on the position size that you actually have. But that's the maximum loss that I actually really want to take on this trade. I used to say like $2 and all, and I know it probably slipped from that dollar, but that's why I put that dollar. That dollar get me where I should be below that $2 if it actually slipped. It shouldn't slip that high, And then I'm thinking about, okay, how long is it going to take me to make that dollar back? Will I make that dollar back that same day, or is it going to take me a couple of days to make that dollar back? So that's one of the reasons for the whole dollar. And still, you got to know if it's bad, it's bad, and that's why again it comes to practicing, and seeing the market and understanding the market that you're actually trading. Minimum credit on this trade. Again, I was thinking like $1.50 is going to be the minimum amount, and I thought I was going to be only getting around $1.50, maybe a little bit more, $2. But a lot of times when I was actually executing this trade, and actually even live, I was just getting close to $3 on this trade. So again, I'm okay with that. That's a whole other thing. If I see I can't get $1.50 on this trade, I'm not placing this trade. And I like staying at that point to delta. I don't want to get any closer. I don't want to go to a 0.3. I don't want to go to a 0.1. 0.2 is good. Somewhere between 0.1 and 0.2, or 0.15 and 0.2 is where I want to be at on this trade. And then the other thing, if you're going to practice this trade, document what you're doing. Then you can come up with some rules, some of your own, what's best for you type things and because you're going to see that from your documentation that you've done, and look at the other studies that are out there. So that's pretty much it. That's all I want to do. And the thing is now is getting ready to go ahead and make my next move on this trade. And that's pretty much all I really want to share. Let's just take a quick look at the market again. The market has made an early V-shaped bottom and then kind of dropped. This was around 11:30 look like, it made it act like it was going to double bottom on you, and then gave you some pain and then back up. But yeah, the market has been crazy today but it's a good day. And that's all. Have a profitable and happy week and weekend, and I'll talk to you probably in a couple of weeks. Have a good one. Bye. This is Right Side Trader. Where's my thing?